Hi, Ronnie Ordoña here. Today we will talk about risk management. Masarap mag-profit taking sa stock market. Kaya ang perang pumasok na ay ayaw na nating palabasin pa. You don't want to give that hard-earned profit back to the market. Lalong ayaw natin na matunaw ang ating trading capital kasi pag nangyari to, bankrupt na tayo. Parang tindahan na nawalan ng inventaryo. Ano pa ang ipang nenegosyo mo? Kaya kailangan na sa mga trades natin, lagi tayong nagpa-practice ng risk management. That is to protect our trading capital and accumulated profit. So what do we need to do? Well, that's where our discussion will center on. So watch the rest of the video. Not all trades will give you profit. Many will give you losses. At pag tuloy-tuloy ang losses at malalaki ito, mauubos ang dati nating mga profit at mababankrupt tayo. Saan ba nanggagaling ang risk sa stock market? Well, sa paggalaw ng presyo ng stock. The price of a stock responds to what is happening around us, like inflation, rising interest rates, and falling GDP of the country. Also, it is affected by what is happening to the company itself, like if it experiences lower sales volume, more aggressive competition, lower earnings, you name it, marami yan. These are all beyond the trader's control, but the way you respond to them, to those events, will protect you from them. Now, there are other events that could happen and cause you to lose money but are well within your control. I am talking about making trading mistakes. These are example, buying too early, buying too late, selling too early, or even picking the wrong stock. If you are unable to control the way you trade, those mistakes will keep coming back and eat up your money. The way to protect your money from going down the drain is to manage risk. And if you practice this the right way, reward will follow. So risk is always there. When you say you know that when you trade, there is risk, and you may even say with pride that you are a risk taker. I'm in the stock market, and therefore I'm a risk taker. Now, this may be so, but if in reality you don't accept the risk, you will be like this lady on the tightrope, nervous, fearful, doubtful. What do I mean by taking risk but not accepting risk? Okay, let's take a closer look at the lady. Okay there, we can see her face better now. And we see that she's afraid. If you're up there on a tightrope and nervous, what is likely to happen? You'll fall. And that's not a bad guess. Fear will cause the lady to lose her balance and miss a correct step. In trading, fear is a sign of not accepting the risk that goes with trading. When you trade, you have to accept that as a result of this particular trade, anything can happen. You could make a profit or you could lose. If you have not accepted this risk, then you will want to avoid it. But risk in trading is unavoidable. So this will produce a conflict inside you. Trying to avoid that which is unavoidable will cause tension and conflict within you. And you won't win this conflict because it is you against you. You just need to resolve this. Otherwise, this conflict will cause you to doubt your trading system. With doubt, you will hesitate to take action. And when your trading system is giving you a buy signal, you will hesitate to buy. Kasi the devil in you will tell you, pag nag-click ka ng buy button, baka mali yan, wait ka na lang muna. That is when opportunities will escape you. Fear will cause you to focus your attention to the object of fear and away from other market information that are also there. For example, the falling price. Natatakot ka baka magtuloy-tuloy. Yun na lang ang lagi mong nakikita. Pero yung good news of bigger earnings ng stock mo this quarter, di mo napapansin kahit this can cause the stock to reverse the direction. Kasi nga, your attention is in that which you perceive to be causing you danger, the falling price. That's our survival mechanism as humans. And as a result, you won't be able to take the right action. Kulang ka kasi ng information. In the stock market, prices move every second and every minute. So when you dilly-dally, this means you are likely to pass up opportunities until you are very sure. But you cannot be sure now or later. There is no certainty in trading. Like we said in an earlier video, trading is a game of probabilities. The edge that you have from your system is all probabilities. Just like the house or the casino, whose edge makes it more likely to make money than lose it. The losses that come with the spin of the roulette does not bother the house because the edge will manifest in the long run. His focus is in bringing in more gamblers because the more they are, the greater the casino's chance of winning. This is also similar to any traditional business, say a laundry business. When you put up this business, you are not 100% sure that you will make money. But you will try to have an edge over your competitors by perhaps having more machines, having lower price per kilo, free internet, better service, etc., etc. This will give you an edge, and therefore you are now more likely to succeed, but not 100% certain. You as a trader, once you have assessed that you have the edge, your focus should be in executing your system flawlessly so that you can keep your edge. Over many trades, you will be a net profit maker for as long as you have the trading system with an edge. Let me push this topic of probabilities some more. Let's play coin toss with a 100 peso bet. Okay, let's say you pick tail. So, let's flip the coin. Okay, there, it's head. So you lose. Will you get angry? Will you feel bad? No, you won't do that because you are aware that your odds of winning to losing is 50-50. And you accept that. That's common knowledge. You don't have a high expectation that you will win because of the odds. You have an equal chance of winning and losing, so no reason to be angry. The same should be the case in trading, but it is not for many traders. This is because many traders have high expectation of the stock that they buy. They do a lot of research, ask many people around, discuss the stock with friends and families, read a lot of analysis. In other words, they become committed or attached to the stock even before they buy it. So when this stock turns out to be a loser and their system is already telling them that it's time to sell, they will not. They feel bad letting go because of the high expectation. So what do? They cling to the stock and allow it to fall lower and lower in price. And they are left hoping and praying until someday it comes back, if ever it will come back. This is when the attitude of believing anything can happen in a trade is so important. It frees you from over expectations that come from your over analysis of the stock. In trading, the odds are actually in the trader's favor if he is using a system with an edge, say 60-40. That means his chance of winning is 60% and his chance of losing is 40%. That's an edge of 20%, better than the casino's edge of 5.4%. So, the more he should not be bothered by the outcome. He just have to keep in mind that losing is part of the process of trading. He cannot have his profit without experiencing some losses. So, stop worrying, don't be fearful for as long as you are using a system with an edge. You just need to trust your system and execute it without error. And so, how do you know that you have accepted the risk in trading? You can enter and exit a trade without pain. That means you could make a mistake, sell at a loss, but feel no pain, regret, or anger. That's the true sign of accepting the risk. This trader in the picture, as a metaphor, is calm, confident, and fearless. He can therefore see clearly all information that the market is giving, and he can make better decisions. But then, perhaps you will say, but there is no perfect system. What if the losses keep mounting? In that case, the trader manages the risks. It is in risk management that a trader identifies his risk, measures how big it is, and takes action to mitigate it. Risk management recognizes that the trader will be wrong some of the times, but the mistakes he makes are not going to be fatal. Risk management will allow him to come back from a fall and continue to trade until his edge makes him a nice profit. So that's it for the meantime, my friends. In the next video, we will discuss the specific techniques traders do to mitigate the risk to which they are exposed. We will also do some mathematical computations, so have your calculator ready. That should be exciting. If you find this video educational, please like it, leave a comment, and share it to your friends or family. If you want to know more about trading, attend my online webinar. It's free. Okay, thank you for watching and see you soon.